Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, Jim, good to be with you, and it has been a fascinating market out there.
Yes, and we love to start our show with listener questions, and our question today comes from Cecil.
Yeah, as you know, I pronounce it the British way, Cecil. And Cecil has never complained, so we always welcome his interest.
Oh, yes. So, Cecil, good friend of the show, asks, "Hey, Bob, you believe we're at the end of a debt-driven financial bubble, so does that mean we should expect to see a large reduction in the amount of outstanding debt across the economy? Are there any economic figures that monitor this debt, and is there any way to gauge when total debt has gone down enough to signal the end of such a bust cycle?"
Well, let's do the first half first. Yeah, there's great financial markets are very elusive when it comes to cause and effect. So your first part is it's a debt-driven financial bubble. Not quite. What it is a raging speculation where prices of everything are going up, which permits the employment of leverage. So the expansion of debt, even if it's debt being pushed out by the central bankers, are not causative. The event is a crazy mania in soaring prices, and everybody gets leveraged, and even the Federal Reserve, in providing extra credit, is actually become another impassioned speculator in the play. So yeah, people can have calculated the amount of debt outstanding, and then the next part, any economic figures that monitors debt, yeah, they're out there, but who cares about the numbers? It's the direction you want to get. Now, financial history shows us that in each of these great manias, the first one, there have been speculative markets throughout all of history, but the first really proper financial bubble erupted in England and in Paris in 1720. In England, it was called the South Sea Bubble. And that was the same thing, same huge bubble. Everybody borrowing debt to leverage up on the trip. And then it ran out of steam, and then it crashed. So the question about gauge when total debt has gone down to signal the end of the bust cycle. Now, the end of each of the great financial manias, when they peaked, there's been, 1929 was number 5, this is number 6, and 4 out of the 5 were followed by chronic weakness in credit markets and prices and everything, and it was, you could call them Great Depressions. And they lasted about 20 years. So the way that I've found to formally identify the bottom of a post-bubble contraction is the low in commodity prices and the low in nominal interest rates. I choose the long end of the bond market in the senior currency. So you got kind of two things out there, the low in commodities and the low in interest rates. But before we get the low in commodities, these things are still pretty robust, but getting exceptionally overbought. And the bond markets are getting exceptionally oversold. So I think you can get a quick rally for the bond future in here somewhere. It's kind of dangerous for traders only. But then you'll get the liquidity problem, whereby the world discovers that everybody has taken on more debt than the economy can service. So everything heads down nastily, so as I say. It's probable that the post-bubble contraction has started. Confirmation would be a wipeout in the fall, and then it's likely to be a long contraction where everything really changes, but you still have the 3 to 4 year business cycle in there. So, now we got another part of the question.
Yes, Cecil asks, secondly, if you were in charge of the Fed, what would you do over the short and long term to ensure prosperity given current conditions? Does honest money require a gold standard?
Hey, the first part, ensure prosperity. God, the interference by the Fed, since it's opened its doors, has supposedly to ensure prosperity, because when it was formed, movers and shakers at the time knew that recessions followed a credit crisis. So the notion with the Federal Reserve System was that it would be a lender of last resort and would bail out the key problem, and then there'd be no credit crisis and therefore no recessions. There's been 18 cyclical recessions since. The theory does not work. But what the practical researcher would conclude in looking back at this history, they've taken the purchasing power of the dollar from $1 down to about 3 cents in over 100 years, and you still get the same business cycle. The Fedsters still think that they can control the business cycle and maintain prosperity, but at the end of the story is that the whatever goodness you can imagine in a central bank has been corrupted by the fact that its real role over the last decade has been to provide unlimited funding to yet another experiment in unlimited government, and it's absolutely idiotic. They are unable to ensure prosperity, and the record shows that they're unable to prevent contractions. So, but it's like socialists. Each new set think they can get it right this time. So now then, does honest money require a gold standard? Yes. Quite simple. When you have gold convertibility, anybody who owns the currency can go to a bank and exchange their banknotes for the equivalent in gold coin or gold bullion, and it works. Now, the conflict out there is that the central planning cable really thinks that through wizardry in interest rates and money supply and credit supply, the central bankers can manage the economy. It's yet to be shown. But what they find is that if the currency is convertible into gold, that's a discipline on their ability to issue credit. So their pitch is, on fiat money, we can manage the economy and prevent bad things. But they exacerbate financial speculation, making the bad things worse. So then you go to the other half of that, which is that at least the gold standard, gold convertibility, imposes some discipline upon the crazed central bankers. So it is a wonderful tool. And I think that if we do go into another serious contraction, and there is political reform going on out there already, that the public is going to look at the trillions of their tax dollars spent by these idiotic central bankers to prevent bad things from happening. And in the face of very serious bad things, they're going to take a look at the Fed and said, you spent trillions of our dollars and you blew it. So they and others will figure out that the Fed needs to be disciplined, same as any other central banker. So, and then that's ultimately the best discipline has always been the gold standard. And I firmly believe that it will return. It'll be very exciting times, and I'm hoping I'll be around for it.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your eye today. Fed to fight inflation with the fastest rate hikes in decades.
Yep, that's a good headline. It's fascinating that most of the last decade, the Federal Reserve was concerned that inflation was too low. We saw it year after year after year. And they know that if inflation was too low, then it could slip into deflation. So they had very easy money policies. And they still don't understand that when it's time for speculation in financial assets, the extra credit will not go into the economy. It goes into the game, namely stocks and bonds. And then as the financial bubble gets close to its end, that's with a business, you get a business boom. It puts commodities up. And then these idiots went and shut down lockdowns with COVID. So then there's shortages of supply. And then the most recent one is the regrettable invasion by the Russians of Ukraine, an important grain growing area. So you've got the forces that move prices up are natural and tied to the conclusion of the bubble. The shortages are unnatural and tied to crazed politicians. So this will work its way out, but I'm going to add to this one, Jim, that the huge commodity boom associated with the Great War that ended in 1918, you had the boom in commodities drove prices up to 1920. And recently, the U.S. the media are all hot about U.S. inflation being up to something like 8%. In 1920, it got up to 24%. And then, like all commodity global booms, it crashed. So that in 1921, the U.S. rate of inflation went to minus 16%. So then the Fed saw that and knew the dangers of weak prices. So they were fearful through the 1920s that there wasn't enough inflation. So they were easy with monetary policy and did not understand what happens when you get into a regular financial bubble. So they were providing fuel for the fire that finally erupted and blew out in 1929. So it is wonderful for me as a market historian to look at what the Fed has been doing for the last decade and realize that the Fed did exactly the same during the 1920s. So, it's unbelievable what they're doing out there. And also, we're going to add that once the financial mania is over, the event has been deflation in most prices.
Well, one of the things you point out, Bob, is people get crazy with their money when there's a lot of it around and they've run out of traditional things to buy. Is that why we have things like NFTs and virtual real estate selling on virtual islands for hundreds of thousands of dollars? And as I said to friend of the show, Mike Swanson, the other day, if people have taken out a loan for that virtual real estate and that market crashes, how is the bank going to repossess that property and foreclose on it?
Oh, yeah. No, this is imaginary stuff. Like, even in 1720 with the financial bubble in London, there was an issue floated, well documented, where the story was so great they couldn't let it out, but you had to get in and buy the stock. And then there was even women got together and formed a company and floated it public. And the big pitch was, this is run by women. This is great. And then also some ordinary folk, maybe some servants at a grand house, had a little money and got on the right side of the market, made money. And there's even documented accounts where they bought or rented a coach with a team of 4 horses with footmen and everything else. And then when the bubble was over, boom, suddenly all that grand coaches and stuff and horses were on sale at the used coach market. I think it was at Spitalfield, just on the verges of London then. So This is what we're seeing now. People are buying $3 million cars as if it was nothing. And they're also sending out for $1,000 bottles of champagne from a corner store. So this is as wild as it gets. And it'll be fascinating to see. And it will transit to a contraction. The interesting part will be just watching it happen.
Mm-hmm. Headline, long bonds battered as Fed credibility crumbles. Did they have any credibility to crumble in the first place, Bob?
No, there are many people who believe in the wizardry of the central bankers. And that won't be tested until you get a full classic financial collapse. But they have no abilities, and the reason now, if the theory behind the Fed's formation in 1913 that they could prevent recessions by preventing credit crises, if the theory worked, it would have been one magnificent bull market for everything forever with never any recessions. But as I said, there's been 8 cyclical recessions, and it disproves the theory.
Now, of course, these guys calling the shots, trying to slow inflation or in some cases increase inflation, they don't live in the real world, Bob. They live.
No, they don't.
Their salaries are tax-free. The only taxes that people who work for the Federal Reserve have to pay are on real estate.
Yeah. 3 years ago, they were worried about deflation, and now they're acting to end inflation, and it would have ended anyways. So, any speculative market burns itself out and crashes. That's standard issue and well documented, or even back in Roman times, 2,000 years ago.
Speaking of taxation, Bob, I'd like an opinion on this. Vancouver Mayor Kennedy Stewart says all the empty businesses that are boarded up in downtown Vancouver should have to pay a vacancy tax for being empty after being forced to close due to a pandemic and criminal activity and a downturn in the local economy and no office workers downtown for 2 years.
Yeah. How pathetic. How very pathetic. They're, again, taking on the owners of property rather than tending to their own previous intrusion. And even now, the communist government in China is shutting down Shanghai. I think it's 25 million people, and it's been the financial center of Asia for a long time. Even back in the 1920s, Shanghai was the financial center. So, no, the warning should be idiots at large.
Also, the city of Vancouver wants to charge people $3,600 just to apply to have a patio for their restaurant. Other municipalities during the pandemic, I think it was Port Coquitlam, Port Moody, they would actually send city workers out to help a small business, a small restaurant build a patio to attract customers because, first of all, in the summertime, Vancouver can have terrific weather and we have the best views in the world. So why not enjoy them? I think the provincial government's put a kibosh on that $3,600 fee. But look, these are businesses struggling for 2 years, and here's the mayor's solution. Let's tax them more.
Yep. Well, the bureaucrat is always more important than the ordinary citizen, the ordinary businessman. And this is what prompts popular uprisings, where the line I've been using for a long time has been in your face and in your wallet becomes too much, and then you get popular uprisings, which we are getting. And I've dated similar popular uprisings back to ancient Egypt 4,500 years ago, where the governing classes lived very well because they controlled the grain market, and they were protected by the palace guards with their spears, and ordinary folks were having hard times with poor harvests. Hey, speaking of poor harvests, this is going to be one this year. There were shortages and even times famine. But the interesting thing, and this was research work done by a highly regarded astronomer from Harvard, Barbara Bell, and she pointed out that when push came to shove, the palace guards were not of the governing classes. They were of the people. So they laid down their spears, and people took over government. Some might have called it anarchy. Some have called it dynastic changes, and they got rid of the pharaohs, and they got rid of the advisory priesthoods. Now, I'd read her papers in the mid-'70s, and so then when you saw the protests developing in Eastern Europe in the 1980s, I thought, whoa, what's going to be the equivalent? And of course it turned out to be the border guards in East Germany and Berlin, and there was an instant where the border guards laid down their machine guns, and East Germans went into other parts of Germany and into Hungary, cross-border shopping, and then the East German dictator Honecker had to change the law that required him to the state to murder Germans from going from one place in Germany to the other. And there was more to that. That was the key. The conversations by Reagan and Thatcher and Gorbachev were sidelines. It was the moment the border guards laid down their weapons, that was it. Game over. So now I've done a study on this, and the equivalent today is, of course, palace guards term doesn't work. Border guards have disappeared at the southern border of the States. But I came up with the term swamp guards. So they're everywhere. They're the media, and the guards are protecting the swamp. Now, some of these are changing. Grenfell is a columnist that was on the left, and he changed a few years ago. Even Bill Maher, whatever his name is, a TV personality, has changed from left to admiring the left to criticizing it. So in the swamp guards, there is some minor but important change happening, and I think the whole thing's going to collapse because you've had crazy politics and radical crazy financial markets, and I think they'll both collapse at the same time.
Headline, Wall Street reacts to Lyft as its stocks fell 30%, and stocks overall suffered their longest losing streak since in the last 10 years. So,
yeah, that was one of those high flyers.
Yeah.
From its close the previous day to only an hour or so into the trade, it had given up 30%. That's a mighty whack.
Headline, as coffins come home, Russians confront the cost of their invasion of Ukraine.
Yeah. When Russian invaded Afghanistan, I think there was something like 18,000 body bags sent home over a period of number of years. And I think a reliable number now is in 3 months, about 20,000 body bags going home. And the one they can't keep quiet about is I think they're out to now 11 generals killed. So it's doubtful how long that Putin can keep in control. I think there's a popular uprising brewing up against him.
Another headline, Ukrainian stolen farm equipment by Russian troops being sold off in Belarus was shut down remotely. They couldn't start it up, I guess, after they bought the stolen equipment.
Yeah, they didn't buy it.
They tried to.
The story was that there was a dealership with agricultural equipment, which would mean tractors and combines and seeders and all that sort of stuff. So the Russian troops started seizing them and taking them away. And then, of course, whether it was a John Deere or a Case, and actually there's an Ukrainian manufacturer of farm combines that is really outstanding. But at any rate, it doesn't matter the brand name. The guys at the head office can disable all the electronics that are needed to run those machines. I mean, a combine can be up to $600,000, and they're all controlled GPS. And you can go along harvesting, say, corn, and you can set the thing to go at 9 miles an hour, and the supposed tractor driver of the machine just sits there with air conditioning, and the vehicle is steering itself and setting in the right speed. This is remarkable stuff. So at any rate, I thought that was kind of amusing because they went to the work of stealing the farm equipment, and then the head offices in each case just push the button, and it disables the ability to operate the stuff. Classic.
Bob, thank you so much for chatting with us.
Jim, good to be with you, and let's look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob and he loves to answer them, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.